Gold has been on an absolute tear the last 18 months, and it's sitting right at the previous all-time high price set in 2011. But this overlooked sector is lagging way behind, and this gives us one of the best opportunities to turbocharge our investments. And in this video, I'm gonna explain just how far behind and how undervalued it is, and I'm gonna show you the 3 most important tips I use to find the very best assets for triple-digit returns. So stay tuned. All right, welcome back. If you're new to the channel, my name is Mark Moss. So happy that you're here because I believe the only real security we have in life is to take responsibility for ourselves. We have to learn how to make our money, grow our money, protect our money, because that's what gives us the options in life. Now, the world's changing fast. You probably already know that, and we need options more than ever. If you agree and you like those topics, click the like button right now so more people hear that. And of course, hit the subscribe button and bell notifications so you're notified every time I put new videos out. Now, I got started in gold investing about 12 years ago, about a dozen years ago, about 2008. And really, it was a big moment in my life because that's when the Great Financial Crash happened. And if you were around during that time, it was tough. And for me, it wiped out my entire real estate portfolio. And it was a devastating experience for myself. I've told you my story before. You've probably heard that. And I vowed to myself and to my family to never let that happen to me again. And one of the things that I had to do to make sure that never happened was I had to learn. I had to build my education. I had to learn the intricacies of the financial system, how it worked. And that meant that I had to go all the way back to the beginning, how it was founded. I had to find out how the current financial system was built. I had to start with the creation of the Federal Reserve back in 1913. I had to find out what money really is, and then what happened to it since then. Now this path led me, of course, straight to gold, and how moving from what was once hard sound money tied to gold and into this fake fiat currency, it led to massive currency and debt creation, which led all the way up to the 2008 crash that wiped me out. Now, before we dive into this, I do want to give a shout out to Mike Maloney for his work on gold. It was a big pivotal piece for me, for my education. Like I said, about a dozen years ago, it's helped me to shape my views where we are today. And I started this channel to help educate each one of you. I always say I'm going to tell you what I would want to hear if I was on the other side of the table. And so I'm going to educate you just like the process that I went down. I've been making videos on gold for well over a year now. The first video on this channel on gold was in February 2019, and it was titled Gold, Why I'm Buying the Safe Haven Asset Now. You can see it linked up right here. So I said I was buying it February 2019. And since I've released that video, the price I think was about $1,300 at that time, $1,300 an ounce. And since then, we've watched gold price just continue to climb and climb and climb back over its previous all-time high, where it's still sitting right now about its all-time high. And even with that, I know many of you watching this video right now might never have paid any attention to or really even known about gold stocks until maybe just a couple of months ago. Of course, I've been talking about them quite frequently on this channel. But just a few months ago, after the market crash in March of this year, the reaction to the trillions of dollars that the Federal Reserve created and printed and put in the system, we saw gold and silver shoot up like a rocket ship, which is exactly what gold does when the Fed pushes more fake money into the system. Now, once it was clear that the only bailouts could save the world's economies, it was now evident to more people that money printing, economic crisis, and the fear of inflation, they're basically like putting gasoline on a fire when it comes to gold's price. Suddenly, at the height of the pandemic, there was no gold bullion anywhere. You couldn't even buy it. It wasn't even available. And then we saw gold's price soar from about 14, I think it was like 1471 right at that time on March 19th, all the way to an all-time high of just over $2,000 on August 6th. Now that's a 40% gain just since March. It's a 75% return in 2 years since I've been talking about gold. So if you've been watching this channel for a while, you should be doing pretty good by now, but I'm gonna show you a much better way that's still way undervalued right now. But just digging back in for a little bit, as much as gold has been doing, as much as I've been talking about, as much as we've seen it go up, basically that whole time, the long forgotten, kind of forgotten about mining mining companies that produce the gold, they're finally starting to get back in the spotlight a little bit, right? And we've seen gold and gold stocks, they're making headlines all the time. And we even saw big time investor like Warren Buffett, he started buying gold miners. Now the reasons, I've already laid out for you. You can see them in this video right here with Buffett buying gold. But basically it's that miners will soon cash in on these higher prices. He wants to be a part of that. Now, we're starting to see more and more retail investors looking at gold stocks. And the overwhelming question I'm hearing is, did I miss it? Gold's price is back at an all-time high. Did I miss it? I don't want to buy at an all-time high. But my answer is no, you didn't miss it. So let me show you why. So gold's price may have gotten back, well, not may, it did. It got back to its all-time high set in 2011. But in 2011, that was at the end of the cycle. So from 2008 to 2011, it shot up. Today, we're at the very beginning of a cycle and it's just getting going. But we're not talking about gold today. We're talking about the undervalued assets, which is where I look to make money. And so I'm talking about gold mining stocks. They are nowhere near their previous all-time highs, not anywhere close. So let's look at the price of gold and what it did. So from 2008 to 2011, you can see from the chart on the screen, the movement in gold over that time period. During that same period, the New York Stock Exchange Gold Bugs Index, the HUI, rose 320%. Now, this index tracks major gold miners like Barrick Gold and Newmont Mining. As you can see from the chart on the screen, in October of 2008, the HUI hit a low of 151 points before peaking in September 2011 at the end of that cycle at 635 points. But when we compare that activity to what's happened recently, we can see that gold's price blew through its previous high set back in 2011, which you can see on the screen in the highlighted part of the chart. And it looks like it's ready to make a much higher high over the next couple years. But for us investors paying attention, we can see the gold bugs index hasn't moved like gold has. And you can see it on the chart on the screen right now. You can see that the index is well below the 2011 high, as you can see highlighted on the chart. And the reason why is that investors today, they're so fascinated by the tech stocks. Everyone's focused on the NASDAQ and the tech stocks and the tech stock darlings. They're completely missing the huge bull run in gold and gold miner stocks. Now, in the portfolio that I share with my private group, we have several positions, gold and silver, that are up over triple-digit returns just in this short period. But like I said, most investors, they don't want to leave the tech stocks. They want to stay with the DocuSigns and the Zooms and the Microsofts, etc. Stay in the tech stocks on the NASDAQ. But like I said, gold has been on a tear. As a matter of fact, gold stocks have outperformed the NASDAQ 100 just this year in 2020. In fact, the bulk of the investment universe has basically completely ignored the metal and the mining stocks for years. Now, while the major gold miners have moved higher, like I said, they're nowhere near their peak in 2011, which tells me they are undervalued. And as the price of gold continues to go up, it means that the gold miners are all going to make a lot of money selling their gold, which is something that hasn't happened in a decade. Now, as next quarter's results start to trickle in, I expect that gold miners are going to get way more attention than we've seen so far. And the Gold Bugs Index could probably double before the end of the year. So in other words, the gold miners' big move is still ahead of us. All right, it's still undervalued. We still have a big move ahead. There's plenty of room for investors to make a ton of money on all of them. All right, but buying gold miner stocks isn't really easy, but I can give you 3 tips to succeed. All right, these are 3 tips that I use, and you can use them to succeed. You can use them to make huge profits from this bull market that most people are missing out on. And I'm going to give you these 3 tips on an actual company that I'm actually researching right now, so I can give you the full picture of what I'm looking at, okay? So this is a company I'm actually researching. I'm actually considering adding it to my private group portfolio, and it's called Norsemont Mining. Norsemont Mining, and the ticker symbol is NOM. So let's just dig into it real quick, and I'll show you kind of how I go through this. So the first tip number 1 that I like to look for, and if you've been watching my videos, you've heard me say this before, but I always have to repeat it. Even in the interviews I've been doing, they've been saying the same thing. Follow the team. The best team always goes to the best projects. They're not going to give themselves a black eye by going to a bad project. Good teams go to good projects. And so what I do to make my research easy is I just find the good people and I go see what companies they've been on. Well, how do you know they're good people? Well, you do it by their track record, right? So this company, Norsemont Mining, is headed up by Mark Levy, and he has an amazing track record, many successful companies, launches, buyouts. He grew a previous gold miner company named the same, Norsemont Mining. He took it from $1 million and sold it for $520 million, $1 million to $520. He also had another deal with Petakia Minerals. He sold it to Inmet Mining for $350 million. And then even outside of that, he founded Aurora Cannabis. If you're in the cannabis space at all, you know that name. He grew it from a market cap of only $1 million to over $800 million in only 2 years. Now he's got a lot of other deals. I'm not going to dive into every single one of them, but you get it, right? He's consistently taken $1 million companies and sold them for hundreds of millions of dollars. And so those are the type of people that I like to invest with, right? He's not going to put a black mark on his record. And so this new company is named the same, Norsemont Mining, and it's basically a 2.0 version. This guy's proven that he knows how to time cycles, how to sell companies. And so with gold moving as fast as it is right now, the miners are still lagging behind the physical, like I said. I mean, the timing's just perfect on this. And with his connections, I mean, I believe that he can create a great return for shareholders. Another really healthy indicator that I look at is still the team. And what we can see is that the Norsemont Mining, they have really heavy concentration of ownership by the management and associates of the management. And so they only do this when they're confident that the company's going to grow fast, right? They're putting their money where their mouth is. We call that skin in the game. Now, the second thing that I look for, tip number 2, is, of course, as an investor, buy low, sell high, right? That's what we're talking about. So we want to buy things that are undervalued, which is why I like gold miners, because they're undervalued compared to the price of gold, whereas tech stocks are overvalued right now. So we want to buy undervalued companies, but of course that's easier said than done, right? You have to know what you're looking for and things like that. But if I look at Norsemont Mining, I can see that they're undervalued because what they did is they bought a old mine, something that was already previously mined. As a matter of fact, it was being mined by Royal Shell, the oil company, the oil giant, and they were mining it all the way back in the 90s. And back then when they were mining it, gold's price was only about $400 an ounce. And so they stopped mining there because it just wasn't really profitable, right? And so that mine has basically been out of commission since then. And because of that, Mark Levy and Norsemont were able to go acquire that mine for a really low valuation. As a matter of fact, they gave them about $3.3 million in cash, US dollars, plus 15 million shares, which made it a combined deal of about 10 million Canadian. And that's a massive bargain. How do I know that's a bargain? Well, because it was a working mine, there's already all the infrastructure that's there, all the equipment, it's already there. And just the infrastructure alone is valued about $200 million. They've also done a lot of work there, about 125,000 metric tons of drilling, which is about another 60 million. So basically, Mark Levy was able to buy this project worth about 260 million for only 10 million. So for me, that's an undervalued asset. It's 96% discount. It's kind of like being able to buy gold for about $80 when it's about almost $2,000 an ounce right now. Again, undervalued, right? Buying cheap, buy low, sell high. It's the number one rule for investing, and especially in commodities like gold. The cheaper it is to purchase, the more money shareholders can make. Now, the third tip, the third thing that I look for, and really this is in all areas of life. To be successful, we need to have long-term thinking, all right? Long-range perspective, because we need to allow time for these assets to be worked and for them to play out, all right? Now, we are entering what I've been calling, I actually made a video on this, called the trade of the decade. I believe this decade, we are going to see gold go to levels we've never seen before. And so we need several years to allow this to play out, to see gold's price really double and maybe even triple from here. And if that happens, then we'll see the gold miners do 10, 20 times more than that, all right? But this doesn't mean that we have to wait years for our investments to pay off. As a matter of fact, like I said, just in our portfolio, several gold and silver miners are up, over triple digits in just the last couple of months. So it can happen quickly, but we want to have this long-term perspective to give it that time. We saw the Fed chair, Jerome Powell, just came out and said that they are going to hold interest rates to zero for at least 3 more years. At least 3 more years. That is going to be gasoline on the fire. It's going to be going up. They've said they're going to do whatever it takes, etc. And so we are going to continue to see the gold price rise, and we want to stay in it. Gold's poised for another huge round up right now. It looks like it's about ready to take off. And if that happens, or when it happens, then it's going to give Norsemont Mining time to ramp up and then start cashing in from their reserves, which are estimated to be somewhere about 5.5 million ounces of gold in the ground. However, because it's a really old mine from the 90s, it's what they call non-compliant in like a 43-101. So it's non-compliant because it's old, but they're getting it redone right now, right? Back then, regulations were just a lot different than they are right now, so the official numbers are off, but they're getting that done right now. It should be done in about 3 to 4 months. Once that's done, I think we could see the company's 5.5 million gold ounces reserves get re-rated and actually become official, be known what's called developer status. Now, normally, conservatively, I mean, if you look at that, call it $54 an ounce in the ground in a place like Chile, which is where this mine is, which is a pretty friendly country for mining. I mean, do the math. 5.5 million ounces at $54 an ounce. I mean, that's about almost 300 million, which is about a 200% gain in market cap from where it is today. So it looks good. There's a lot of reasons why it looks like it's undervalued. They're ready to start drilling on it. I think we could see this thing grow by 200-300% pretty quickly as soon as they start drilling over the next couple months, because the potential is just huge. So there you have it, right? Another live demonstration of the research that you need to be doing in order to find the right gold mining companies to add to your portfolio to see it skyrocket over the months and years ahead. Like I said, we have several in the portfolio that have done triple digits just in the last couple of months, because when you find the right companies like these, it can be rocket fuel for your portfolio. So hopefully you like that. Hopefully you like these 3 tips. I love investing in gold, one, because it gives us that asymmetric return, but I also love it because of the ideology of going back to hard, sound money. I love the idea of investing with the companies that are actually producing the gold. And of course, I like to build my portfolio along the way. Who doesn't? Now, let me know what you think about my 3 tips. Do you have similar criteria that you look at? Do you think it's easy or hard to find that? Let me know what you look at to make your good informed decisions on gold miners, if you're even looking at them, in the comments down below. Of course, give me a thumbs up on this video if you like it. And if you don't like the video, give me a thumbs down. Either way, I always want to hear from you. Leave me a comment down below. And that's it. That's what I got. To your success. I'm out.